Hi, and welcome to Random Rogers Big Picture for the week of March 16th. Just one thing on the agenda this week. I want to talk a little bit about kind of the market environment and maybe a little more specifically about stuff to think about now and also for future downturns. I got the tipping point for this, as you'll see how the video evolves. I got an email from someone on Friday. It was a nice complimentary email. He sent me a post that I wrote in November where, lo and behold, I was talking about a bear market. I was worried that one was on the verge of starting or had started. You know how that goes. That old chestnut, as Dr. Evil might say. Anywho, so it was a nice email, but it reminded me of something that coincidentally actually I put in a blog post either Friday or Thursday. Really, okay, I think I was kind of out in front of this, but if you look back, you'll see, and this is a point I've made, which means that it's not impossible for you to do, is all of the things I've been talking about as far as looking for this bear market to start, then watching it start, thinking it had started, all of this stuff was really just a series of very ordinary observations that were by and large repeats of past market cycles. It could sum up, I had this ready if I needed it for my CNBC thing last week, that everything I've been saying with regard to a bear market could be summed up with one little phrase: this time is not different. That's it. So from that context, all of the other people who were on TV saying, our good friend Tobias Lefkovich is a prime example, all the people who came on and just completely swung and missed on this, not a little wrong, but really swung and missed, telling you financials look good, back in the late summer and early fall, all of that stuff, not liking materials, all of this stuff. They were actually making a riskier call than trying to guess that a bear market, you can hear a little dogfight in the background probably, that a bear market had started. My entire thesis was this time is not different. The next time is not going to be different. Okay, so if you believe that we are in a bear market, okay, it'll run its course. Maybe it'll be normal, like I've been thinking, or maybe that will be wrong, whatever. It'll run its course. We'll have another bull market. The next bull market will end one way or another. Maybe there'll be some similarities in terms of catalysts, but a lot of the action will probably look the same in terms of the yield curve will do something funky, and there we'll go. To that point, kind of changing subjects a little bit, today, if I'm recording this on Friday, but on Friday, Bear Stearns had a pivotal day. And I think, maybe the stock market had a pivotal day. We'll see. But what happened, if Bear Stearns ends up, getting taken out over the weekend, as Cramer kept saying on TV, a take under. If somehow the name disappears, that's a better way to say it. Somehow the name disappears, whether because it goes bankrupt or it just gets absorbed, or there's an auction and the pieces go here, there, and everywhere, whatever. If there's something like that, okay, remembering this sort of thing, this type of event, is very important for what you might do in the future. I've made a couple of references in the past, in the recent past, to Compaq Computer. It was this was more in when I was talking about the solar stocks kind of having their bit of funniness, which I got pilloried for, which is kind of funny. But great companies, or companies that were once great, sometimes disappear. Digital Equipment was kind of close to where I grew up in Boston. In the 70s, I'm pretty sure was a powerhouse. And I think it was Compaq who ended up buying them in the early 90s. Compaq itself, I remember when I first got into the business, I've got dogs here, that's why I keep looking away. When I first got into the business in the 80s, if I'm remembering my timeline, I know it was before 1990, but Compaq was a a fantastic stock. I think it was a little less fantastic in the 90s, but eventually it went the way of the dodo. That happens. And so in having seen that before, it inures you to the fact that it can happen again in the future. So remember what's going on now with Bear Stearns. Looking forward just a little bit, Citicorp, I'm not making a prediction, but just by way of understanding. Okay, Citicorp is down 60% in a down, if I counted correctly from the top, is a down 17% world. That's meaningful. I don't know that it's a death blow. I have no idea, and I'm not short the name. I don't no puts, nothing like that. But that is a serious message from the market that something is really wrong, and that's going to happen again in the future in some other things. If Bear Stearns goes under, I mentioned on the blog Friday morning that it was a $20 billion market cap at its peak. That doesn't sound so big. Fannie Mae was a $75 billion cap at the peak. Off the top, I don't recall what Freddie was. Something like that starts to get real big. And you know, you can leave comments that the government won't let it happen. Maybe they won't. I don't know. But take away the bigger macro, which is good businesses have problems, and then one way or another they can fail. And observe all of this, take in all of this, look back, you know, at various things that you read, you know, Wall Street Journal archives, Seeking Alpha archives, if you read that, whatever. Go back through and read, get a feel for what happened, how it unfolded, the fact that so many people, and I actually said this ages ago, there will be people who come on and tell you why it won't matter. And of course, it did matter for a whole bunch of reasons. And again, not smart on my part, but quite simply not smart enough to outthink it. This time was no different. That is the bottom line. And that is actually far from a risky bet, betting something won't be different, which is what I did. Not the other way around. So nothing all that clever at all. This time will be the same. It is a pretty easy thing to bet. People usually apply that in the wrong way, but and you know, I'm sure I'll apply it in the wrong way in the future. But for right here, right now, it never was going to be any different as far as I was concerned. And unfortunately, that's playing out. It would have been great to have been wrong. I don't think I am on this one. Where I'm going to be wrong is probably in trying to isolate the bottom. That is, there's visibility to be wrong there. And I'm aware of that, which is why I am not, you know, 60% cash like I read some, you know, one article, a profile of some guy in Index Universe who's 60% cash. I don't have the stones to do that because you know, I don't want to have that much riding on catching the bottom. How about that? Okay, and enjoy the weekend. Lots of sports on, as there always is in March. Best month of the year.